What's going on, YouTube? Welcome to the Credit Plug channel. If you haven't already, make sure you hit that subscribe button as well as smash the like button. So in today's video, I'm gonna be walking you through the FICO credit score. We're gonna be breaking down all the different components that make up your FICO score. I'm also gonna be explaining some techniques that you can apply to increase your FICO credit score. And this will allow you to qualify for different types of credit products, whether that's loans, lines of credit, credit cards, mortgages, car loans. So your FICO credit score is comprised of 5 different components. You have your payment history, which is the largest percentage, 35%, amounts owed. You have length of credit history, new credit, as well as types of credit, or otherwise known as credit mix. You have payment history, as I explained. You have amount of debt, credit history length, amount of new credit, as well as credit mix. So each of these actually breaks up into smaller subsets. Now, payment history is going to be the most important. So this is how you've paid your bills in the past, whether you paid on time or late or missed payments. The more severe, recent, and frequent the late payment information, the greater the impact on the FICO score. So I've explained in previous videos how as you have late payments, the more those late payments age, is the less impact it's going to have on your credit report. But if you have recent late payments, that's when it's going to have the most impact. Within the first 24 months, it's really going to hinder you, but the effect is not going to be as much after 24 months. However, the presence of any late payments on your credit report is going to affect you. So within payment history, you have a couple factors, right? So you have late payments 30 days plus, you have late payments 60 days plus. You also have the number of public records, the number of collections on your credit report, the time since most recent late payment, as well as the percentage of accounts always paid as agreed. Late payments 30-day plus, a reported missed payment or derogatory indicator, which indicates that an account has not been paid as agreed. Authorized users are not considered in the calculation of this attribute. About 98% of FICO high achievers have no missed payments at all. Now, late payment 60-day plus is a similar metric, but it's just looking at the number of accounts that were ever 60 days or more late. And right here it says virtually no FICO high achievers have a 60-day late payment or worse listed on their credit report. So as I showed you with the 30-day late, there were 98% of FICO high achievers, but with 60-day late, virtually no FICO high achievers. Now, what this basically means is that if you have a 60-day late, that's going to have an even greater negative impact than a 30-day late. Now, they're both going to be pretty bad in terms of reporting on your credit. A 60-day late is more severe than a 30-day late. Another component of payment history is the presence of derogatory public records. A public record is a legal record reported on you, usually by the court of law. Derogatory public accounts reported primarily include bankruptcies. FICO 8 only considers derogatory public records with an amount of $100 or greater. Virtually no FICO high achievers have a public record listed on their credit report. Other types of public records can include child support. It could also include wage garnishments, or even if you've been sued by a company, that type of information can show up on your credit report. Another important piece of the payment history is the presence of collections. So a collection is reported on you when a creditor turns over to a collection agency any account that has not been repaid. FICO score 8 only considers collections with an amount of $100 or greater. Virtually no FICO high achievers have a collection listed on their credit report. The fifth component of payment history is going to be time since most recent late payment. The number of months since the most recently reported derogatory indicator or late payment. 0 means you have a currently reported missed payment. Unknown means that there is a missed payment reported, but there's no associated date. No delinquent account means you have no accounts reported with missed payments or derogatory indicators. Authorized users aren't considered in the calculation of this attribute. About 98% of FICO high achievers have no missed payments at all, but of those who do, the missed payment happened nearly 4 years ago on average. However, the presence of any late payment is still going to have a negative impact on your FICO score. And FICO high achievers that did have a late payment, so this is going to be less than 2% of FICO high achievers, the late payment occurred more than 4 years ago on average. So what that tells you is that most FICO high achievers don't have any recent late payments. And the last component of payment history is going to be accounts always paid as agreed. Now, you want this to be 100%. The percentage of rated credit accounts reported that have never been reported as delinquent. A value of no valid accounts means there are no active, non-disputed accounts reported. Authorized users aren't considered in the calculation of this attribute. 98% of FICO high achievers have no missed payments at all. So just to recap, your payment history comprises 6 different attributes: late payments 30 days days plus, late payment 60-day plus, derogatory public records, collections, time since most reported late payment, and the percentage of accounts always paid as agreed. The next component of your credit score is the amounts owed, which account for 30%. So within amounts owed, you have accounts with balances, total balance on revolving and open-ended accounts, as well as revolving utilization. The amount of credit you're using is a very important category of credit data for FICO score. FICO score considers the total balance owed, how many accounts have balances, and how much of your available credit that you're using. So the first attribute, accounts with balances. So this is the number of accounts that have a balance being reported. No valid accounts means there are no active, non-disputed accounts reported. Authorized user accounts aren't considered in the calculation of this attribute. FICO high achievers have an average of 3 accounts carrying a balance. The number of accounts with balances is a very important attribute to keep in mind, because a lot of times you might see recommendations in terms of what credit utilization that you need in order to maximize your credit. Some say 30%, some say 10% total utilization as well as within account. But here's another caveat that you have to consider. Let's say you have 10 credit cards and all of your credit cards have a utilization of 10%, right? So they're all under 10% or lower. However, the fact that you have balances on 10 of those accounts is going to bring down your FICO score because of the number of accounts with balances. As I just showed you, FICO high achievers have 3 accounts that they have that carry a balance. So let's say you have 10 credit cards, you might have 3 of those with a balance and the rest of those are going to be zeroed out. So you don't want to carry a balance on every credit card, even though you might have 10% or 5%, it could be 3%. But the fact that you have a balance reporting on every single account, that could actually reduce your FICO score. So that's one attribute to keep in mind. It's not just about the utilization within account or as well as total utilization. You also have to be mindful of the number of accounts that actually have a balance reported, and you want to keep that to a minimum. The next component of amount of debt is going to be the total balance on revolving and open-ended accounts. So that's the sum of balances being reported on open-ended accounts. So that's charge cards and revolving accounts such as credit cards that are reported as open. Authorized users aren't considered in the calculation of this attribute. Most FICO high achievers owe less than $2,500 on revolving and or open-ended accounts such as credit cards, charge cards, and department store cards. And the last attribute is going to be revolving utilization. So revolving utilization, so this is the ratio of the sum of the balances on revolving accounts divided by the sum of the credit limits on revolving accounts. I also want to highlight this right here. So authorized user accounts aren't considered in the calculation of this attribute. So when we're talking about revolving utilization when it comes to your FICO score, and this is coming directly from FICO, so you guys could challenge FICO if you want, but right here it says authorized user accounts aren't considered in the calculation of this attribute. For FICO high achievers, the average ratio is less than 7%. So if you want to be in that elite status in terms of revolving utilization, you want to have 7% or less revolving utilization on your primary accounts. The third most important factor of your FICO score is going to be the length of credit history. And again, this is something that you don't have too much control over. It's not like something that you can fast forward. You actually just have to go through the process of managing your credit over time in order to improve this category. So when it comes to credit history length, you have average age of accounts, and then you have age of oldest accounts. FICO scores consider the average age of all accounts being reported. Generally speaking, having a relatively long credit history and not opening many new accounts is reflective of lower credit risks. Authorized users aren't considered in the calculation of this attribute. Most FICO high achievers have an average age of accounts of 9 years or more. Now, if you're someone who just started building credit, you're going to have a very low average age because you just haven't had that long of a history in terms of managing credit accounts. And again, this is probably the component that you have the least amount of control over, because you can't just automatically increase the age of your primary accounts. Then you also have age of oldest accounts. FICO score consider the age of the oldest account being reported. Generally speaking, having a relatively long credit history is reflective of lower credit risk. Authorized users aren't considered in the calculation of this attribute. FICO high achievers opened their oldest account 25 years ago on average. So just think about that. In order to be a FICO high achiever, you need to have an age of account of at least 25 years. Again, this just goes to show that when it it comes to credit age, you just have to go through it. There's really no shortcut around it. The next component of the FICO score is going to be the amount of new credit. So this only accounts for about 10%. There are different components of this. You have the number of recent inquiries and the age of the most recently opened account. While FICO scores typically consider the number of inquiries on a credit report from the past 12 months, the number of inquiries is much less important factor than late payments, total amount owed, and length of credit history. 70% of FICO high achievers did not apply for credit in the past year. Now, the other component of amount of new credit, which I consider to be more important than inquiries, is going to be the age of your most recently opened account. People who recently opened a credit account are generally more risky to lenders than people with no recently opened accounts. Now, quite often I'm talking about why you should garden before you go on an application spree. And the reason why is because, as FICO just pointed out, borrowers who open up accounts less frequently are going to be deemed as less risky. So if you're opening a bunch of new accounts in a short period of time, that's looked at as credit seeking. Last but not least, we have types of credit or credit mix. So credit mix comprises three different attributes. You have revolving accounts, you have installment loans, including mortgages, as well as bank issued credit card accounts. Revolving accounts are credit accounts in which the monthly payment varies based on the amount owed. The borrower may defer a revolve payment on part of the balance. FICO high achievers have an average of 11 revolving accounts. Installment accounts are credit accounts that have a fixed payment for a fixed period of time. Installment accounts usually are for a single large purchase, including auto and home. FICO high achievers have an average of 5 installment accounts. Last but not least, you have bank issue credit accounts. So bank issue credit accounts are a subset of revolving accounts. FICO high achievers have an average of 6 bank issue credit cards. Now, I've talked about this in several other videos about how there's a difference between bank issued credit accounts and consumer finance accounts. So consumer finance accounts are just like store types of accounts that are issued from the company, whereas bank issued accounts are institutions, banks, credit unions that actually issue credit cards. And there's a difference in how FICO treats that. So having more bank issued accounts versus consumer finance accounts is going to be more beneficial to your FICO scores. Now, just some of the key takeaways, right? In terms of payment history, you want to be cognizant of any derogatory information that's reporting, and it can affect your credit score for up to 7 years. You also have different attributes within payment history. So the time since the most recent late payment. So basically how they're going to calculate that, they're going to look to see when the last reported late payment was, and then calculate the time since then. Now, typically the more recent the late payment is, the higher the impact, but don't just think because it's 6 years ago, 5 years ago, 6.5 years ago that you're in the clear and it's not going to affect you, because just the presence of it on your report is going to put what's called a derogatory indicator. So a derogatory indicator automatically will classify your profile as high risk. So the presence of any derogatory information, whether that's a collection or a public record, a bankruptcy, any of that information is going to be negative for your credit. When it comes to amount of debt owed, another thing you want to consider are the number of accounts that have a balance. Now, you hear a lot about keeping your utilization under 30% or under 10%. Now, that's total utilization, but that's also within account. However, you don't want to have all of your accounts with a balance, because that will negatively affect your credit. Now, FICO high achievers have 3 accounts with a balance reported. When it comes to your credit history length, you have the average age of accounts. So this is just going to be an average of the age of all of your accounts. And then you also have the age of your oldest account. So the age of your oldest account is just going to be how long your oldest or your first account was open for. Now, the 2 other components that only account for 10% is going to be the amount of new credit as well as the credit mix. So in terms of the amount of new credit, 70% of FICO high achievers did not apply for credit in the last 12 months. And on average, FICO high achievers open up account more than 2 years and 7 months ago. So when you open up accounts less frequently, you're looked at as less risky. So if you're not applying for credit as often, you're not going to come across as, desperate or, in a financial bind. And I say this all the time, if you just keep continuously applying for credit, eventually you're going to start to get denied. Now, if you want to ensure the best chances of getting approved for different types of loan products, you want to refrain from applying for different credit products for a certain length of time. Last but not least, you're going to want to have a mix of different types of accounts, including revolving revolving accounts as well as installment accounts. Now, within revolving accounts, you also have bank issued accounts. Now, bank issued accounts hold more weight with the FICO score than revolving accounts that are not bank issued, like consumer finance accounts. You know, a 5,000 My Jewelers Club account is not the same as a $5,000 Chase or American Express type of account. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section down below. And until next time, take it easy and we'll talk to you soon. Peace.